Welcome back, guys. Okay, welcome back, guys. Um, this is our daily market review. Today is really a long day for trading. Like seriously, you have to be very extremely smart. Even with the daily market review, I do here every day. Does not guarantee that it is going to be successful. And I had to think outside the box sometimes when I'm engaging with price, when I'm you know pyramiding and taking an entry, when I'm buying or selling, I have to reason with price according to how it is trading when I am ready to trade, which is either the London or the New York session. So there are many factors you need to to embed together in order to have successful trading. This is what I'm doing here is day trading, but it is not everyday trading. It is day trading, but not everyday trading. Most people don't understand that concept. It tends to be very difficult. Why will you say you are teaching day trading and you are not telling that same people that not it is not everyday trading? Does that make sense? Well, it really makes sense. So that you not every day you have to go and trade. Some days I don't trade, but I had to come here and do these videos so that we it also helped me to read the chart, write the chart, do my journal, and knowing that there are people who are expecting me to do this, who are waiting for me to do this, makes me to be more consistent. And I really appreciate you guys. I really appreciate you guys for making me consistent with what I am doing daily. So thank you so much. And I myself am consistent, so don't think because it is you or not. But I appreciate your effort. So that is just the fact I need to say. So we have a long day to go today because many things happened today. We never thought it's gonna happen today. So this is Euro US dollar daily contracts for Wednesday, January 2024. And I have my daily comment here. The Euro US dollar daily contract for Wednesday, 24 January 2024. That is some kind of rhyme. 24 January 2024 did not deliver as call out yesterday, but respect and respond to all the PDRs we talked about and look into in the market yesterday. So it really, respect those PDRs in which we talks about and we are looking into yesterday. So that is a very great point, and I had to make it. Now the Euro US dollar rally higher in the early opening price of today trading and take out previous day high, which we earlier intend not to be taking yesterday, but we take it today. We take the previous day high, which is the buy side liquidity that was taken, and market tapped on the daily ICT bearish order block before rallying lower into the daily trading range. That is, on the daily we trade into this bearish order block, which I have been talking about in my previous videos. So we traded into it, and after taking out the buy side liquidity, we traded into it, and before you know, we rally. And this kind of rally just tell us something. It tells us now it is ready to go lower, or it is ready to start consolidating again. Whatever. I am very pleased with the Euro US dollar price delivery for today, building for today because it has built my confidence on expecting or looking forward to lower price delivery for euro. Casting forward, we can use the daily candle week consequent encroachment of today candle as a PDRA to expect the market to react and respond to. That is this today candle, the week, the high, this week high, the consequent encroachment of that candle is a very significant area to expect. We don't expect market to trade above it for today. Okay, if we are really bearish, we are not supposed to trade above it, but we can wick through it, but the body of the candle must not close above it. Just like we are bearish, but we wick up, but the body of this candle did not trade above here or did not close above here, because if we close above, that signify a lot of important information. Now, I am anticipating for lower price delivery on Euro US dollar daily contract, and also having the consciousness that it might continue ranging, meaning that I'm expecting lower price delivery, and I'm also having the consciousness that we might continue ranging. That means we might not take out the sell side delivery, we might start ranging, but I favor more on what? Sell side. So let's go to the dollar index and see, how they are correlated before we go forward. So this is the sorry guys, I have cough and it's very painful. So this is the dollar index for Wednesday, January 2024, on 24 January 2024, and we can see that also on the dollar index we trade into the volume imbalance, this liquidity void, the volume imbalance, which is the which is a new day opening gap. This particular gap is not this one is the weekly opening gap, and this is the new day opening gap. We trade into it, which makes so much sense, like very it makes so much sense that the market get into this area. Sometimes what we are expecting the market to do, when the market don't do it, we get angry. But if we take it into consideration and we reason the logic behind it, since we already know that this market is run based on algorithm, now the algorithm is delivering price into an inefficiencies and making sure that the price delivery is efficiently distributed. That means price are efficiently distributed. Now there is no efficient distribution in the market around this gap, and that is what we should use those gap for, and that is why we call out fair value gap, new week opening gap, new day opening gap. They all work the same. And candle any candle that has a longer week, we can also use that the midpoint of that week as a gap as well. So which why would they call it the consequent encroachment? That is why I usually refer to them. Okay, so we can see how we weak into it just a little bit and price rally higher. This is just efficient and very good. So thanks, and we'll go to the 4 hourly contracts on the daily on the Euro US dollar before we come to the XY. So this is the 4 hourly contract for Euro US dollar. Now, the Euro US dollar 4 hourly contract shows nicely the price delivery for today trading range. On the 4 hour, we can see Euro price in the 4 hourly ICT fair value gap. That we price into the 4 hourly ICT fair value gap, or CB, before trading lower, and also how nicely it tap on the daily bearish order block. Now I am pleased to see Euro take out previous day high and price into the 4 hour ICT fair value gap that is inside the daily ICT bearish order block. So we have the buy side liquidity that was here yesterday. We price above it and price above this daily order block, and tap on the 4 hourly fair value gap, or CB, which is sell side imbalance, buy side inefficiency, before market deliver lower into the trading range. And this is just amazing, and this is why I make sure I say on the comment that although we did not deliver as we call out yesterday, but market respond to all the PDRAs that I mentioned yesterday. So you can also work with that. Now casting forward, we can see on the 4 hour that Euro is really not interested in delivering higher price. That is, right now Euro is not really interested in giving us higher prices, and we are trading at an ICT 4 hour inversion fair value gap, which I am anticipating for market to trade lower through it and later use it as a characteristic of what ICT bearish fair value gap to support lower price delivery. Meaning this inversion fair value gap, 4 hourly inversion fair value gap, we are trading around that area right now. I am anticipating that going forward we week through it, like that is euro trade through it and later come back to it and use it to support the sell side delivery. Then we have this sell side here, then consequently we have another sell side here if we are really going to go lower. But I prefer we come to this low next week. Well, that being said, we can go to the we still have something to say on this 4 hour. Now, the euro US dollar next draw on liquidity favor sell side liquidity. That is the low of today and plus what yesterday low as our initial draw on liquidity. Now, it's I will be pleased not to see euro price above the daily candle week consequent encroachment, which meaning that I will be pleased if euro did not come above this particular daily consequent encroachment. Will euro come above it? I don't know. Will it? But if we are going to be bearish, and if that bearishness is going to be effective, then we are not supposed to get there. But if we get there, we also work with what the market is saying, because we are wrong and the market is always right. Now it is not buying and selling where the buyer is always right or your customer is always right. Now the market is always right in whatever it do, and however you react to it. If you are wrong, you are the one that is wrong and not the market, because the market is delivering the way it is quoted to do. So you follow the footstep of the market, and that is how you are going to be profitable, and that is how you are going to be uh you are going to be in the right path. So work with what the market is saying, and that is why you don't have to be jumping around and you don't know what you are doing. So you need to know what you are doing and what you want, and know what you are looking at and how to react to them. So having said, let's go to the dollar index. Okay, this is the dollar index for hourly contract, and as you can see, this fair value gap was still respected. Even here, the market closed below it on the 4 hourly candle. No, we wick down and come back. The market did not close below it. That is one of the most things everybody needs to know. And see how nicely the market get into that volume imbalance that we talked about on the daily. Very perfect. We just wick into it, you know, pack all, fill in this inefficiency and this gap, and now there is an efficient price delivery at this point. So which now left market to deliver higher prices on the dollar index, which is the XY. So we are expecting bullishness on the DXY and bearishness on the euro, which is very, 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 very sweet to say, because if you can trade, also you can trade DXY and trade euro at the same time if you know what you're doing. Sometimes I do something like that, but it is not just find one and trade. Don't try to trade two at the same time because you know what they are doing. So what if you are wrong? Then you lose two contracts, and that is going to be detrimental to your health. As a trader, it's going to make you to lose more, because we we encourage losing and discourage learning. So I hope with this, I'm just thinking what else can I say on this dollar index. But we also have this inefficiency, which is the an inversion fair value gap. I did not want to draw it since we are trading inside it, so I did not want to put attention to it. But it is back in my head. I just want to point it out for you guys. There are so many things I am looking at right now. There are so many things I am defining in my head that I cannot. It's not everything I can call out. Okay, let me example of it is the buy side, sell side. Now, how is this market deliver? We take out buy side, take sell side, take buy side, take sell side. If you look here with this low created this high, that created this low, and this short time high that did not take out this low, making this place and this place relative equal highs. Then we come down, take this low, we trade, we take out this low again and get into this. Now we are having how many highs? One, two, three. We have four highs, and that is what makes it a very good point to expect higher prices and see how market trade into this fair value gap and brush them through. These are the things that I already running on my head, but I can't see them, because I'm trying to make sure this video does not pass 20 minutes. Let's go to the hourly contract on euro dollar. So this is the hourly contract on euro US dollar, and as we can see, okay, let me not say much. Let me just read the statement we have here. The Euro US dollar hourly contract or 60-minute contract shows nicely the intraday algorithmic market delivery from Wednesday 24 20 2024 contract. So on the hourly contract, we can see how euro price and use the bearish breaker into bullish breaker and price higher, sweeping above previous day high and tapping into the daily bearish order block before delivering lower into the trading range, meaning that we can see this bearish breaker that I call out yesterday. We price into it, weak down, then we use it as a catalyst to price higher, because it is what give the energetic move in the during the London session to go higher. I was at work today. I could not trade this London session, and if you go on 15 minutes, it was so sweet, so beautiful. Like, sometimes I just imagine if I'm not working and I have 24 hours to look at this chart. Well, if I have to do that, then I have to take more losses. So appreciate everything, and that is just life. You have to appreciate everything. The fact that I'm leaving the chart to do other things sometimes doesn't mean that if I'm in the chart I could be able to make money, but just that's why you have to appreciate everything and not neglect anything. Now, also we can conclude that the overall price delivery on euro since this week has been based on liquidity sweep and feeling of inefficiencies, which is what I just explained using the dollar index, the XY. Casting forward, we can see the ICT bearish order block on hourly contract that can support the idea of bearish delivery going forward with euro US dollar, meaning this bearish order block can support tomorrow price to go lower. So I expect I want to see market deliver during the New York London session into this bearish breaker, then we trade lower, then in the New York session now we might reverse, then use that as a catalyst to continue our lower price delivery. The daily profile is an obvious 2 o'clock AM as AM New York local time as the low of the day that just tap on the hourly bullish order block formed at 12 o'clock AM New York local time, meaning this particular bearish candle is the low of this one is the low of the day, and this one just price below and tap on this daily bullish order block that was formed, and that is another thing to see how the bullishness was formed today. The high of the day is formed at 9 o'clock AM New York local time that price into the daily ICT bearish order block and tap in the 4 hourly fair value gap or BC before trading lower into the trading range. We might not get opportunity to go to the dollar index and explain this because my time is almost over. But the high, this is candle is the high of the day that trade into the daily bearish order block and price rally lower into the trading range and also tap on the 4 hourly fair value gap or CB, sell side imbalance, buy side inefficiency. So going forward, we can look at what I just illustrate with this marker here. Let's go to dollar index and just view it. Okay, this is the dollar index hourly contract. This dollar index really make a lot of sense. We can now say that this fair value gap will support the price to go higher, and this is a swing, a shift in market structure on the hourly contract, which is a kind of higher time frame to me. So since it's on the hourly contract and we can well expect the market to come here then before going higher, I hope this video was insightful. Please do subscribe to this channel, follow us, and join our Telegram community because I'll be bringing up hot info